Hi there, my name's Chris Cann with Mining Journal, and with me I have Hayden Locke, who's President and Chief Executive of Marimaca, a copper development group based in Chile with its namesake project. We've kidnapped Hayden for about an hour and we'll do a series of interviews on Marimaca itself, and today we're going to focus on the primary metrics and those key metrics around the project, largely from the PEA published a few years back. Welcome, Hayden.
Thanks, Chris.
Looking at the production as the obvious starting point, 36,000 tonnes per annum as I understand it. Where does that sit, Marimaca, in terms of global production?
Yeah, it's a small project at 36,000 tonnes, and I think the things that the PEA was done in June of 2020, so quite a few years ago now, and it was based on a much smaller resource. And one of the things that we identified as a management team was just that scale. It's not the most important thing in a mining project. We too often see scale for scale's sake or scale to justify a project moving forward, but it is important. You do get economies of scale in these large industrial projects. And so one of the things we looked to address over 2021, 2022 was really the potential scale of the project. And the last resource that we released, which was in 2023, we doubled the size of the contained copper resource. So we are looking at the moment, we're doing our DFS as we speak, but I'm pretty certain that we're going to see a reasonable step up in scale. I think we're targeting sort of around the 50,000 tonne mark. No decision's been made yet. That will make us at the small end of globally significant. Okay. So we are still a small project, but from my perspective, small is beautiful in the new climate of global mining.
Okay, you are in the land of giants if we kind of look at a context of the regional production landscape. How come, if this is a great project and it is straightforward and it does have good metrics as it appears to have, why hasn't somebody else found this and developed it already?
Well, it's been known about for a while, but the geological belt that we're in is the low coastal range of the Chilean Cordillera, which is not a hunting ground for porphyry copper deposits. And in general, the largest copper producers in the world are looking for porphyries because they are just enormous in scale. It doesn't mean an IOCG project, which is what we have, can't be a very large scale. In fact, Olympic Dam is an example of a supergiant IOCG. They can be very, very large. But the generally accepted wisdom was you wouldn't find a project of this scale in this belt of rocks. And we challenged that wisdom and made a discovery which is significant. It's still not big enough for a major. So, you know, if you look at the infrastructure that majors require in order to justify running a mine, their sort of thresholds are at least 50,000 tonnes, but probably more like 100,000 tonnes a year. So we're not unhappy about that. We think it's a mine that will be built. We are hopeful it'll be by us, but we also recognise that projects of this quality often attract the interest of larger fish.
Okay, and you talked about the DFS that is underway. Firstly, when should investors expect to see that? And secondly, going back to the PEA, which is potentially now, given inflation and a few other inputs, a little bit out of date. NPV was, I think, after tax 8%, 520 odd million. IRR was low to mid 30%. What kind of changes are you expecting, if you're allowed to talk about those, under your regulatory restrictions, with the DFS coming in? And probably more specifically, where are the areas where you think there is some tweaking to do where you can see some uplift?
Yeah, so the PEA, we ran the economic model using $3.15 a pound copper. So that's the most obvious thing. Typically, okay, these large scale projects are quite sensitive to the underlying commodity price assumption, and there's been a reasonable shift in that. And we, like all other projects, are relatively sensitive to the underlying copper price assumption. You're absolutely right. Inflation is a key focus. In terms of our capital intensities, we talk about generalized capital intensity. Typically, SXEW projects, oxide heap leach to produce copper cathode, which is what we're doing, have much lower capital intensity than a comparable copper porphyry. We're talking $10,000 a tonne of copper produced versus north of 20 in large-scale porphyries in the high Andes. So while we do expect there to be some movement in our capital costs, we don't expect it to be something that makes it prohibitive for a company like us to build this project ourselves. And of course, the more important thing is that copper price has also moved. In terms of operating costs, we're seeing nothing that will change our view that this will be a sort of top of the first quartile, bottom of the second quartile, all-in sustaining cost copper project. Obviously, we've got to do the work first, but that's our goal. We're never going to be bottom of the first quartile because we just don't have byproduct credits, and but it is a structurally always going to be a low-cost mine because it is low strip ratio, decent metallurgy, very close to all of the infrastructure required to build it. The supply chain network, we're 25 k's from a port that delivers all of your consumables. The cost and execution risk of a project like this is so much better than the vast majority of projects I've worked on. And so we expect it to be very manageable. And when you combine industry-leading CapEx with manageable OpEx, certainly strong OpEx in many ways, you're going to get top of the pile return on invested capital metrics.
Okay, and you talk about what's manageable there. Obviously, that comes down to management, and it's not uncommon in our industry to see good projects and straightforward projects become incredibly unsuccessful based on bad management. What's to say that Marimaca's management team is up to delivering this project? Who's in the stable that can actually build mines?
Yeah, that's a question we get a lot, and it's I think we're going through the transition from an explorer and developer to a mine builder right now, and we're slowly building out our capabilities. So at the board level, we have two members of our board who have recently done this previously. That's Clive Newell, who's one of our directors, who was a founder of First Quantum, and obviously First Quantum, one of the most successful mine building groups in the mining space, and remarkably successful. The second is Giancarlo Bruno, who recently retired from his role with Capstone. Prior to that was with Anglo American, incredibly experienced in the copper space in Chile. So that's the leadership at the board level, and I think there's a recognition at the board level that we need to transition if we are to go and build this ourselves, which is, as of right now, the very strong intention of the company. In the management team, well, whether or not I am the person to build it, I'd love to stay on and try and build it, but got to be a recognition that I haven't done it before. In our senior management team, we have a gentleman named Leonardo Hermosia, who used to be VP of Capital Projects for Barrick in South America. He's our VP of Projects on this, and he's building out his team below him. And then in terms of our partnership, outside the group that's delivering the DFS, we're using Ausenco. We have a history with Ausenco, and we've worked well with them in the past. But the reason we particularly liked Ausenco for this role, and potentially a more fulsome role in the future, is their recent experience building the Manta Verde project in Chile for Capstone. And they've delivered that on time and on budget through COVID, which is a pretty remarkable feat. So the key thing when you're going through the study phase is to have up-to-date information, not on the equipment prices, anyone can get equipment prices, but on all the other things that feed into it: man hours, indirect costs, then the things that you can't know, labour productivity rates, things that you can't know before you commence construction. You need that history and that experience in order to get a good feel for what it's actually going to cost you to build it, and we think we've got the right team.
Okay, I just wanted to drag you back to the DFS quickly, because I think we went past, I might have asked a 12-prong question initially. I don't think we got a delivery date out of you for the DFS. And the other thing I wanted to touch on, the Chilean peso is uncomfortably strong for you at the moment. What kind of impact has that had?
So in terms of timelines, our focus right now is on getting our permits application in. And the reason for that is permitting is our critical path. There is a large aspect of engineering for those permit applications. So we have to do quite a lot of engineering to satisfy the approval authorities in Chile that we understand the project that we're going to build. So Ausenco is currently focused on that. That'll be delivered in the middle of the year, and the permit application will be in the middle of the year sometime, and then the focus will shift completely to the DFS. Current timelines are we'll deliver it at the end of the year, and we're still pretty confident that that's the case. It's not the critical path for this project. We're doing further work which will benefit the DFS as we do the permit engineering. So yeah, that's the timeline as it currently stands.
Okay, and the peso issue.
Yeah, the peso is about 40% of our capital exposure according to the PEA. I don't have an updated number, but it is always a concern, and it typically gets stronger as the copper price goes up. So we will be watching it with quite a lot of interest, and we'll be, certainly once we get into the point where we're going to be thinking about financing and building it, I'm sure our lenders and our investors will want us to take a view on hedging some or part of that currency exposure.
Okay. We touched on the idea that an IOCG deposit is not a porphyry deposit. The region is very well attuned, has the infrastructure in place for porphyry development projects, the skills, the expertise, etc. Does it change markedly when you're looking at an IOCG deposit development? Does that change your CapEx expectations? Does it change the skill sets, the infrastructure that you need and that's readily to hand?
Well, I think there's two different aspects to it. As a general rule, porphyries will have an oxide component, but the large proportion of a porphyry is in a sulfide component, which is a very different project to what we're talking about at Marimaca. So yes, the capital intensity goes up significantly when you start to talk about flotation of sulfides in a concentrator to create a con that you then sell to, the smelters. And so that's the key difference between what we're talking about and what a typical porphyry would talk about. Rarely do you see a porphyry just develop a oxide project by itself, because typically the oxide project won't stand on its own 2 feet, especially when you're at the top of the Andes. There's those sort of infrastructure challenges create additional capex and fixed capex, and in order to justify those fixed capex, you need to go for a much bigger project. So the typical capital intensity rules are per tonne of copper produced. It's about $20,000 per tonne of copper produced for a large-scale concentrator project. So, if you're going to produce 100,000 tonnes, you're going to be spending $2 billion. A rule of thumb. Further up into the Andes, the more remote you get, the less infrastructure. That number can go as high as $25,000 a tonne. Typical rule for a straight oxide heap leach going to an SX and producing cathode in between $10,000 and $15,000 a tonne. Recently, Arizona Sonoran delivered a PFS on their project in Arizona, obviously, and the capital intensity, I think, was $10,000 a tonne on that project. They had a $70-80 million pre-strip in there, which we can remove. So we're expecting to be on the high side, $10,000 a tonne, but ideally somewhere below that.
Okay, and what about cash in the bank and then prospects for financing? Obviously, you've got some very well credentialed strategic investors on the books already. What's the cash requirement to get through that term of work that you talked about with permitting, then the DFS delivery, and then what's the expectation when it comes to raising the capital for actually building the project, building the mine?
Yeah, we're fully financed for all of the work that we've got going on today, so we can deliver our permitting and our definitive feasibility study. What we've got our eye on now as a management team is, okay, well, we don't want to lose any time from delivering the DFS. What often happens is we don't know what the outcome of the DFS is going to be, and not sure that we're going to be able to finance it, we're not going to be able to build it. This project is incredibly robust. When we ran the PEA, we did downside scenarios at $2.50 a pound copper, and it still had a 20% IRR. I mean, that's quite a remarkable downside protection. So our view is this will be a mine, and so we're looking to the future and saying, okay, well, there's no point that we should take our foot off the accelerator, and we're looking to, in fact, speed up. So we've got one eye on the next phase of financing. As you mentioned, Mitsubishi Corp, incredibly fortunate to have what we think is probably the most important non-operating investor in copper in Latin America as our key cornerstone now. It was a very long and arduous due diligence process, and they are now very much our partner, and we're working alongside them to deliver the DFS. But we expect that Mitsubishi is very keen to be a part of this project going forward in some capacity, and have the capability to finance this themselves. I mean, it's a relatively small investment for them to build the whole mine. So actually financing is probably the area that I'm least concerned about in terms of this project. Much more focused on shortening the timelines for permitting, and in the second phase, how do we continue the momentum towards FID? A big part of that is building out the team, and so the next phase of capital costs will take us into further de-risking, detailed design and engineering, infill drilling, potentially a pilot plant, really tightening up all of the estimates that we'll have from the DFS to make it a much lower risk building discussion, and then building out a first-class team, which in my experience is the biggest challenge for a new company, is to find the right people and get the right culture.
Sure, and how are you addressing that particular challenge? As you say, those skill sets are limited, and they're getting even more limited every day.
Yeah. So we are addressing it by starting early, and in fact, when I present to the board, I say, we're not actively out looking for people now, and we're not advertising for positions, but we are certainly being opportunistic as good people become available who fit our culture. And by that I mean we need people who think about running things leanly, managing risk, not making decisions to reduce the size of equipment and things without considering what the downstream risks will be, but equally, making sure that we're always thinking that capital is not free.
Sure.
And so those people do become available, and one of the benefits we have as a company is we're now being recognised as a project that will become a mine, and so we're getting approached a lot. And we've got, we just had a conversation yesterday about setting up a proper HR function in order to take control of all of the unsolicited applications we're getting from local members of the workforce. But it's very much an opportunistic thing at the moment, and then gradually getting ourselves prepared for ramping that up. But the key is filling the senior positions now, or in the over the next 12 months, well ahead of when we're going to need them.
Okay, we will talk specifically about the exploration side of things and the rocks in a different interview, but just to understand regionally, my understanding is Marimaca is an oxide project as it currently stands. The DFS is going to be based on an oxide project, still expanded resource, but still oxide. There is a sulfide play under the oxide, and you've got regional ground as well. Can you just provide essentially just a snapshot of what it looks like in the bigger picture?
Yeah, we control all of the ground now that we think is prospective for Marimaca style mineralisation. Remember, Marimaca is an anomaly in the belt that we're in, and we have the benefit that Sergio and his team, who's our VP of exploration, has developed a huge amount of intellectual property relating to that deposit, and we've used that to expand our aperture and make sure that we're controlling all of the ground that is prospective for Marimaca style mineralisation. Unfortunately, we've been a bit constrained by budgets, primarily because we've been so successful with exploration at Marimaca. We haven't had the money to go out and work on those, but now that we're in the project development phase, Sergio and his team are expanding back out to look at our regional exploration play, and we've put out some announcements on that, which people will find interesting, and we'll continue to present more information on why we're excited about that. But there's sort of three prongs to it. There's the near mine, as you spoke about. There's the sulfide potential at depth. There is still a little bit of potential to expand the oxide resource at Marimaca, but we're in terms of exponential growth or multiples of growth, I think the oxide is now certainly reaching maturity. The sulfide is exciting, but it is a more challenging exploration and quite costly exploration program. And so in our current phase of development, from a risk-adjusted basis, I think we're probably better to park that and move it to an exploration program once we're in production and fully financed. The regional exploration is very much focused on shallow oxide, which is complementary to Marimaca. So that's the second prong, if you like, of our exploration program. And if we go back in time, we drilled 3 conceptual targets and made 3 new shallow oxide discoveries. And that's 100% hit ratio, which is remarkable. I mean, and some of the drill results, if we put them out today, would have us in the top 10 list, the best hits in copper, and people largely ignored it because Marimaca was just so much better. So we're now going back and looking at those deposits again and wondering, okay, well, we've got a potentially 15 to 20 year mine life in Marimaca, arguably, maybe it's 14 to 16 years. How do we go from 14 to 16 years to 20 to 25 years? And those regional exploration targets become very much the focal point for that. And then the third piece of the puzzle is this new block of ground called Sierra de Medina, which personally I am very, very excited about. What has been always an interesting discussion is there's a large project, copper project in that region called Mantos Blancos, which is a manto-style project. Again, not a porphyry, not an IOCG. It's its own sub category. But the real question with Mantos Blancos was, which is a much larger project than everything else in the region, is why does Mantos Blancos exist and are there other Mantos Blancoses? And in our belt, it was accepted that typically the projects would be much smaller but a similar sort of grade. Recently, Antofagasta made another discovery 50 kilometres to the northeast of Mantos Blancos, 300 million tonnes at 1%, bit over 1% copper. So a large manto-style discovery. And we own a significant land package next door, and we benefit from the public disclosures that they've made about the geology that they're seeing at those. So that has really focused us back in on those opportunities, and we're working out now how we finance, without diluting our shareholders to the main project, finance Sergio and his team to go out and hopefully discover something that has the potential to dwarf even Marimaca.
Okay, we will get into that in proper detail in a separate interview. It sounds to me, just in summary, Hayden, DFS coming out in the near to medium term that you're expecting to reflect the increase in oxide resource. Risks feel like they're reasonably managed from what you're telling me. Infrastructure in place, largely from a regional perspective. You've got some upside on sulfide and then a regional exploration play as well. It all sounds fantastic. I mean, what actually keeps you up at night? There's always a risk. There's always something that must play on your mind in terms of what could potentially go wrong. What does that look like?
Yeah, the permitting timelines is my key focus at the moment, and we have a very strongly held internal view that Marimaca is quite unique in terms of its location with respect to the spectrum of risk when it comes to permitting a project. People often ask me, Chile good, Chile bad, and I say, well, it's like every other jurisdiction. You can't just say Chile in its entirety is good or bad. There are nuances between different areas. It's the same in Australia. If you're permitting in New South Wales or Victoria, much more challenging. WA, significantly easier. Chile is exactly the same. We're in the Antofagasta region, the largest producer of copper in the largest copper producing country. So naturally the permitting risks there are somewhat diminished, but then that is further diminished by just the location of the Marimaca project. But the big question I always ask myself is, when people can't tell me what the risks are, there is a risk there somewhere. So we're continuing to scour the project for those risks, but that's probably the one area of uncertainty that I have personally. It's probably unfounded, but that's in my nature to worry. Timelines, I always want timelines to be faster than they are, and the team will complain constantly about my desire for timelines to be met, but I think that's just comes down to the fact that we're not producing cash flow, and so it is very important to our investors to keep things moving forward as quickly as we can. And then obviously people, it's very hard to get good people who make the right commercial decisions and continue to move the project forward in a best risk-adjusted manner. So that's a continual cycle to make sure that we're hiring the best people in the right positions.
Hayden, we are going to interrogate you further on the risks, of course, in a different interview, but for now that's all we have got time for, so thanks very much for joining us.
Cheers.